You're wondering why the majority of cryptocurrency investors end up losing their money, while a few seem to become rich overnight. And today, I'm going to reveal the hidden mechanisms behind these massive failures, as well as the concrete strategies that winners use to protect themselves and prosper in this ruthless universe. The reality of cryptocurrency markets is brutal and merciless, as approximately 90% of people who invest in this field lose a significant portion of their capital. This alarming figure is not the result of chance, but the outcome of repetitive behaviors and predictable mistakes that we're going to dissect together. The first monumental mistake that most investors make is blindly following the herd mentality without ever doing their own in-depth research. When Bitcoin explodes and everyone is talking about it on social media, this is precisely the moment when naive investors rush to buy at the highest point. This collective rush creates an artificial bubble that inevitably bursts, leaving latecomers with considerable losses. The real winners in crypto are those who buy when nobody believes in it, during periods of widespread fear and pessimism. Warren Buffett has been saying it for decades. Be fearful when others are greedy, and be greedy when others are fearful. The second fatal mistake concerns the complete absence of an exit strategy before even entering a position. Chronic losers buy without having the slightest idea of when they will sell or at what price they will take their profits. They watch their potential gains soar during rallies but refuse to sell out of greed, always hoping that prices will go even higher. Then, when the market turns brutally, they panic and sell at the worst possible moment, thus realizing their maximum losses. If this video brings you value and you want to regularly receive concrete strategies to avoid being part of these 90% of losers, subscribe now and activate the notification bell to never miss a video that could literally save your portfolio. Because each additional subscriber gives more strength to this channel and allows me to create even more in-depth content to help you succeed. And don't forget to check the link in the description to participate in the channel's exclusive giveaway, where you could win rewards that will boost your investor journey. Let's now return to the mistakes that cost cryptocurrency investors the most and explore how you can completely avoid them. The third destructive mistake is excessive leverage, which transforms simple fluctuations into total financial catastrophes. Trading platforms offer leverage of 10, 20, 50, or even 100 times your initial capital, which seems tempting to quickly multiply your gains. But what beginners don't understand is that leverage also multiplies your losses exponentially. A simple 5% correction in the market can completely liquidate your position if you use 20 times leverage. Statistics show that more than 95% of traders using high leverage lose all their money in less than 6 months. Smart investors use little or no leverage, preferring to build their wealth slowly but surely, rather than risking everything on a roll of the dice. The fourth monumental mistake is falling into the trap of scams and fraudulent projects that proliferate in the crypto ecosystem. Every bull cycle sees the appearance of hundreds of new tokens, promising astronomical returns and technological revolutions. The vast majority of these projects are either pure scams or poorly designed projects that will quickly collapse. Warning signs include promises of guaranteed returns, anonymous teams, the absence of a functional product, and aggressive marketing communication. If something seems too good to be true in the world of cryptocurrencies, it's probably a disguised scam. Wise investors spend dozens of hours analyzing the white paper, the development team, the source code, and the community before investing a single cent. The fifth critical mistake is the lack of diversification, which exposes investors to devastating concentrated risk. Many beginners put all their money into a single cryptocurrency because they're convinced it's the next Bitcoin. This all-or-nothing approach almost always ends badly because even the best cryptocurrencies can undergo corrections of 80% or more. Smart diversification means spreading your investments across different categories of cryptos, such as established values, smart contract platforms, decentralized finance projects, and stablecoins. You should never have more than 20% of your crypto portfolio in a single asset, regardless of your confidence in it. The sixth devastating mistake concerns ignorance of emotional management, which transforms rational investors into impulsive gamblers. Fear and greed are the two forces that destroy more portfolios than any market correction. When the market rises, greed pushes people to take excessive risks and invest money they can't afford to lose. When the market drops, fear causes panic selling at the worst possible moment, thus crystallizing losses that could have been temporary. Investors who succeed develop iron emotional discipline and follow their investment plan even when their limbic brain screams at them to do the opposite. They understand that markets are cyclical and that every crypto winter is followed by a new spring if you have the patience to wait. The seventh fatal mistake is neglecting the security of your digital assets by leaving your cryptos on trading platforms. The history of cryptocurrencies is littered with massive hacks where millions or even billions of dollars were stolen from exchanges. Mt. Gox, Quadriga, FTX, and countless other platforms have caused their users to lose all their holdings overnight. The golden rule in crypto is simple but often ignored. Not your private keys, not your crypto. Which means that if you don't control your private keys, you don't really own anything. Serious investors use hardware wallets like Ledger or Trezor to store their assets offline, out of reach of hackers. This basic security measure could save your fortune, but most people are too lazy to implement it until it's too late. The eighth costly mistake is not understanding the tax impact of your crypto transactions on your overall financial situation. In most countries, each cryptocurrency sale is a taxable event that can generate significant tax obligations. Naive investors make hundreds of transactions without keeping any records, then find themselves with astronomical tax bills they can't pay. Even worse, some reinvest all their gains during a bull market. Then when the market collapses, they still have to pay taxes on gains that have since disappeared. Proper tax planning and detailed record keeping are essential but boring, so the majority of investors completely ignore them. The ninth destructive mistake is blindly following influencers and so-called experts who promote dubious cryptocurrencies. Social media is filled with self-proclaimed gurus who claim to have insider information or miraculous strategies. Most of these people are paid to promote certain projects or simply seek to inflate their own portfolio by creating media hype. When an influencer with hundreds of thousands of followers recommends a crypto, they've probably already bought at low prices and are looking to use you as exit liquidity. Smart investors do their own research and never make investment decisions based solely on recommendations from strangers on the internet. The 10th monumental mistake is actively trading instead of investing long-term with a patient accumulation strategy. The statistics are clear. More than 95% of active traders lose money in the long run due to fees, emotions, and the simple fact that it's almost impossible to perfectly time the market. The real winners in crypto are those who regularly buy fixed amounts during calm periods, resist the temptation to sell during corrections, and maintain their positions for years. This strategy, called dollar cost averaging, eliminates the stress of seeking perfect timing, and methodically builds wealth over time. Now that we've explored the 10 main mistakes that cause 90% of investors to lose money, let's talk about concrete strategies you can implement immediately. First, establish strict risk management rules before even investing your first dollar in cryptocurrencies. A fundamental rule is to never invest more than 5 to 10% of your total wealth in cryptos, as this asset class remains extremely volatile. Second, create a written investment plan with clear objectives, predefined entry and exit points, and emotional discipline rules. This plan must include at what price you'll buy, how much you'll invest, when you'll take profits, and under what conditions you'll sell at a loss. Third, continuously educate yourself about blockchain technology, different types of cryptocurrencies, and market dynamics. Winners spend hundreds of hours learning before risking significant amounts, while losers jump straight into the deep end without knowing how to swim. Fourth, use the dollar-cost averaging technique to build your positions gradually without stress. Invest the same amount each week or each month, regardless of price, which allows you to automatically buy more when it's low and less when it's high. Fifth, secure your assets with hardware wallets and rigorous operational security practices, including two-factor authentication everywhere. Laziness in security matters costs cryptocurrency investors billions of dollars each year who could have avoided these losses with a few basic precautions. Sixth, join communities of serious and educational investors rather than hype groups filled with overexcited beginners. Learning from experienced people who have gone through several market cycles is invaluable for avoiding costly mistakes. Seventh, keep a detailed journal of all your transactions, your reasoning, and your emotions to identify your destructive patterns. This simple but powerful practice allows you to learn from your mistakes and continuously improve your decision-making process. The ultimate reality you must accept is that getting rich with cryptocurrencies requires time, patience, discipline, and continuous education. There is no magic shortcut or secret formula that will make you rich quickly without effort or risk. People who succeed in this field are those who treat crypto investing as a marathon and not as a disorderly sprint.